Hello, good afternoon, ma'am. Good afternoon to my fellow classmates. Our topic for today is all about Chapter 6, the business plan. I introduce the members of the business plan: Maria Abigail Aboseo, John and Manuel Alaria, and yours truly, Madel B. Puncardas. The chapter objectives are: first, we have what is the business plan, second, purposes of a business plan, and lastly, we have parts of a business plan. Planning is a very important activity which involves deciding that will be done, who will do it, where, when, and how it will be done. Planning is a systematic approach to achieve certain objective. It attempts to eliminate mistakes inherent to on-the-spot decision. So when it comes to business, the planning is important things to do so that the business plan is organized. What is business plan? The definition jives with the general description of planning stated above. First, what, where, when, and how it will be done. It's covered by the proposed venture, its operational and financial details. Second, who will do it? It's is discovered by its manager's skills and abilities. A business plan is document containing a written summary of the proposed venture, its operational and financial details, and its manager's skills and abilities. It is all about on how you will handle a business and how it will be done by using a business plan. First is organizing, creating a structure and stuffing it to achieve objectives. Second, we have directing, influencing members of organization to achieve objectives. Third, we have planning, determination of objectives and how they will be attained. And lastly, we have controlling, determining if objectives has been accomplished and taken in action. When we say organizing, the second K management function after the planning, which coordinates human efforts, arrange resources and incorporates the two in such way which helps in the achievements of objectives. Second, directing refers to a process or techniques of instructing, guiding, inspiring, counseling, overseeing, and leading people towards the accomplishment of organizational goals. Third is planning, the act or process of making or carry out plans, specifically the establishment of goals, policies, and procedures for a social or economic unit city, planning business planning. Controlling lastly, the measurement and correction of performance in order to make sure that enterprise objectives and the plans devised to attain them are accomplished. Purposes of a business plan. A business plan has various uses. Among them are the following. First, we have to help the firm management. Second, to attract potential investors. And lastly, we have to serve as the legal document with which funds are raised. The purpose of business plan is to help articulate a strategy for starting your business. It also provides insight on steps to be taken, resources required for achieving your business goals, and a timeline of anticipated results. Most entrepreneurs can go about the day-to-day affairs of the venture without referring to any document. There are cases, however, when a very important operational aspect is left out, in which will be later cause serious damage to the small business. A careful laid out business plan will be eliminate such as a problem, and it is important to ensure that every requirement is covered. The business plan simplifies the review process. A plan to lay in the mind of the entrepreneur cannot be readily reviewed, and it may be even harder to know if such a plan exists. When it comes to starting a business plan, it is important to have business plan. The value of the business plan is important. It in the start of an organization, the value of proper business plan is an organization can determine if the organization will withstand over of the time or for years to come for that matter. And implementing a proper business plan, proper planning in it itself important and variable to the process. And that's all for my topic, and let us proceed to the next reporter.
Now let's move on to the next topic, which is the parts of the business plan. Depending on who will use the business plan, the content must be made to satisfy particular requirements. Generally, however, the plan serves the needs of the owner and managers, bankers, advisory, consultants, and inventors. So here are the William Osgood recommends the following components of the business plan. First, the definition of the business. Second, the market research and analysis. Third, development plan. Fourth, the manufacturing plan. Fifth, the distribution and service plan. Sixth, organizational plan. Seventh, the development schedule. And lastly, the financial plan. First, let's talk about the definition of the business. In this section, the following must be considered. First, the nature of the company. The nature of the company is referring to the overall purpose, goals, and existence of a company within a market sector or industry. It describes its legal structure, industry products or services, operation, and the overall characteristic of the company and what it does to reach its goals. Second, the products or services offered by the company. The business plan, products, and services section is the centerpiece of your plan. While other sections of your business plan are important, the products and services section is the essence of your business and the point around which every other part of the business plan is built. Third, the nature of the industry. When building your business plan, you must know about the industry you're going into and be aware of the possibilities in any aspect of your business, either towards its success or circumstances. To be able to know and be aware of the nature industry analysis is part of good management. That's not just for business planning but rather for business survival, beginning to end. Most of the people who successfully start their own business have already had relevant business experience before they start, most often as employees. Fourth, opportunities available that can be exploited by the product or service to be offered. When starting a business, you should identify and discover the opportunities available that can be exploited by the product or service that your business is going to be offered. Begin by identifying new business opportunities. For example, you can carry out a SWOT analysis. It can help you to find favorable options, and also it helps you to find out the opportunities available that can be exploited by the product or service that your business is going to offer. And also, opportunities exploitation is characterized by developing a product or service based on a perceived entrepreneurial opportunity, acquiring appropriate human resources, gathering financial resources, new goods, services, raw materials, and setting up the organization. Make use of new technologies or adapt existing ones, explore new business model, use consumer insight to update your products or improve your service, extend your customer base on attract new prospect, and increase customer loyalty. Now let's move on to the market research and analysis. The collection and interpretation of data related to the firm's market is undertaken. These activities led to the creation of the marketing plan, which must contain the following. First, situational analysis and target market. The situational analysis is a detailed description of the environment or the company and the product line or service that at the time the plan will be initiated and implemented. Second, the marketing objectives and goals. The marketing objectives must be stated. An example of an objective is to be able to establish a foothold in the market. To attain the objective, a goal or goals must be established, like being able to sell or a certain area or group of establishments. Third, marketing strategies. Marketing strategies refers to the business overall game plan and actions taken to reach the goals and objectives for reaching prospective consumers and turning them into customers of their products or service. Fourth is marketing tactics. Marketing tactics refers how strategy will be carried out, the strategic actions that direct the promotion of a product or service to influence Specific marketing goals. An example is recruiting sales agents. Fifth is scheduled and budgets. A marketing plan schedule must be prepared, showing in detail every marketing activity determines when work eliminates are to be completed, milestone achieved, and when the project should be completed. The budget determines how much money must be allotted, how much each work eliminate should cost, the cost of each level of the work breakdown schedule, and how much the total project should cost. And lastly, the financial data and controls. The financial data section must contain the following. First, sales estimate on a monthly basis. A sales forecast is an essential tool for managing a business of any size to estimate how much your company plans to sell within a certain period of time. It is a month-by-month forecast of the level of sales you expect to achieve. Second, cash flow requirements. Operating cash flow is calculated by taking cash received from sales and subtracting operating expenses that were paid in cash for the period. Operating cash flow is recorded on a company's cash flow statement, which is reported both on quarterly and annual basis. Third, break-even analysis. A break-even analysis is financial calculation that weighs the cost of a new business, service, or product against the unit sale price to determine the point at which you will break even. In other words, it reveals the point at which you will have sold enough units to cover all your costs. And fourth, estimate of the inventory turnover. Inventory turnover indicates the rate at which a company sells and replaces its stock of goods during a particular period. The inventory turnover ratio formula is the cost of goods sold divided by the average inventory for the same period. And lastly, measures of profitability. Measures of profitability are class of financial metrics used to assess the business ability to generate earnings relative to its revenue, operating cost, balance sheet, asset, or shareholders' equity over time, using data from a specific point and time.
So, hello everyone, my name is John Manuel De Loya and I am continuing the presentations. So next we have development plan. What is development plan? These portions of the business plan will show how the proposed product will be developed before it is finally scheduled for production. The example of this are mentoring others, learning from a mentor, completing development course, or joining a professional organizations. So you also need to consider and identify your specific career goals, and you need to gather your information before developing a plan. So next we have manufacturing plan. This manufacturing plan, the quality and quantities of the company's product or service as described in the marketing plan will be produced through a well-conceived manufacturing plan. The manufacturing plan includes manufacturing facilities, location, size, rentals, purchases, required requirements, equipment cost, and etc. So those are the things you need to consider in order to provide a high quality service or product. So next we have the distributions and service plan. The distributions and service plan provides the steps required to effectively bring the product or service to the market. So these are the pricing, sales, service policies, market penetrations, and timing are indicated. So distribution is the process of delivering or selling products and service from producer or manufacturer to the customer. So as businesses reach more locations, it became very crucial to expanding distributions to make sure that products reach the customers safely and in time. So next we have the organizational plan. So it indicates how the total job is broken down into man-sized jobs, which are provided with specific job titles. Each job title comes with descriptions of specific duties. So for example, a company may decide to spend all of its profit on marketing, so activities to increase demand for their products, and decide to use credit to purchase the extra inventory needed to meet the new demand created by marketing spending. Next, we have the development schedule. So these portions of business plan will provide information on the series of activities required. to make business idea a fully operational undertaking. So scheduling is the act of developing a schedule, which is a series of tasks that need to be accomplished in a specific sequence within a given period of time. These tasks grouped together achieve a common goal on a project or program. And lastly, we have financial plan. It is a document indicating financial requirements necessary to support a given set of plans in other areas. So the main elements of financial plan include a retirement strategy, a risk management plan, a long-term investment plan, a tax reduction strategy, and an estate plan. So the project income statement is a forecast of all items in a financial statement. So the cash budget is a projections of future cash receipts and cash disbursements of a fair over various intervals of time.